Hello and welcome. My name is Craig Kafura, and I am the Chicago Council on Global Affairs Assistant Director for Public Opinion and Foreign Policy. Thank you all, and especially our members, for joining us for today's On the Record program. This program is part of the Council's Hart Program Series on Latin America. The series was established in honor of Gus Hart, former chairman of the Chicago Council on Global Affairs, and it explores key issues in the Latin American and Caribbean region while highlighting and deepening Chicago's ties with the region. We are grateful for the support of the Hart family, and particularly Rob and Kitty Lansing, who make this series possible. If you'd like to submit a question to today's panel, please visit ccga.live and submit your question there. As a reminder, the Council is a nonprofit, independent, and nonpartisan platform. The views expressed by individuals we host are their own and do not represent institutional views or positions of the Council. And now it is my honor to introduce today's speakers. Margaret Myers is the director of the Asia and Latin America program at the Inter-American Dialogue. She established the Dialogue's China and Latin America Working Group in 2011, examining China's growing presence in Latin America and the Caribbean. She also developed the China Latin America Finance Database, the only publicly available source of empirical data on Chinese state lending in Latin America. And we're also joined today by Shannon O'Neill. Shannon is the Vice President, Deputy Director of Studies, and Nelson and David Rockefeller Senior Fellow for Latin America Studies at the Council on Foreign Relations in New York. She's an expert on Latin America, global trade, US-Mexico relations, corruption, democracy, and immigration. She is also the author of a forthcoming book, The Globalization Myth, Why Regions Matter, coming October this year from Yale University Press. Welcome to you both.
Thank you.
Thank you.
And Margaret, I thought we'd start with you just to give us kind of a broad overview of what we're going to be talking about today. You know, the topic of today's conversation is about Chinese influence in Latin America. So when we talk about Chinese influence, what kind of influence do we mean? And what's driving the growth of that influence?
You know, I think it probably depends on who you're asking, right? Whether you're asking policymakers in Washington, or if we're talking about, analysis coming out of China, or certainly their varied views and perspectives in the Latin American and Caribbean region as well. But when I think about, the extent of Chinese influence in Latin America and how it's evolved over time, so much of that is economic in nature, right? And strong economic relationships have frequently political implications as well. Just to give you a sense of the extent of the economic, relationship to date, trade has always underpinned the relationship. It was, sort of the original impetus for Chinese engagement back when the going out strategy motivated state-owned enterprises and others to go to the region to seek out new markets in addition to resources. But it has grown and grown continuously, especially as a share of GDP, even amid the COVID-19 crisis, and even as economies slow, both in Latin America and now to much concern in China as well, to a degree. We continue to see very strong linkages on the investment side as well, although something of a tapering in that respect. And for many years, Chinese finance, especially sovereign lending, was a very central feature of the relationship, and one that China used to forge very strong bilateral ties and to advance certain critical projects. That's no longer the force that it was. We've seen a real decline in Chinese finance over the years, especially over the past couple of years. We haven't really seen much evidence at all of state lending. But nevertheless, there are plenty of banks in the region, commercial banks and other financial entities that are engaged in supporting Chinese companies and Chinese projects. And so all of this in addition to a real focus increasingly on a much wider range of industries beyond just, extractives, for example, or agriculture, which have featured very, very early on, to include now, wide-ranging innovation-related and high-tech related industries, has meant that China's presence and occasionally influence, is really quite palpable, right? And in some cases has affected decision-making in certain countries and policy-making in certain countries. China is, of course, not the only country to have this sort of influence in the Latin American and Caribbean regions, but increasingly we do see quite a presence and quite a bit of influence on decision-making across the board.
So Shannon, how has the growth of trade between China and Latin America affected the Latin American economies themselves?
Sure. So I'd say here that it really has been in many ways a double-edged sword. We have seen a huge growth in trade with China, and particularly, a huge commodity boom, part of the super cycle that Latin America had in the first decade of the 2000s and into the second decade. Had to do with China, had to do with fueling the Chinese economy, all those cities they were building, the manufacturing that they were growing. Lots of the raw materials came from Latin America, and so that was a huge benefit in terms of more trade. It was a big benefit in terms of if they were owned by the state, royalties that were paid to the state, or if they weren't owned by the state, the companies that were doing the mining and the extracting and the like, the taxes that they would pay. So you saw public coffers grow in many places, and in some places, Brazil being one of them, but lots of other countries, you saw them use those funds to reduce poverty, to invest in schooling, to do some things in public services that Latin America really needed. So there was a good side of it. But there's also another side of it. Latin America is one of the two regions in the world that suffers most from what economists call premature deindustrialization. So this is the shrinking of your manufacturing sector in relative terms to your GDP, and sometimes even in absolute terms, before you become a high-income country. So sort of early on. So part of the way that countries get caught in the quote-unquote middle-income trap is that they don't have manufacturing, that they don't sort of climb the scale the way that advanced manufacturing economies did in their day. And so Latin America has been one of the biggest hit by this, and part of the reason is China. China likes to buy the raw materials, but they don't like to buy as much the processed materials, the finished goods and the like. They don't like to buy from Latin America. They don't like to buy it from a lot of places, right? They want to do that themselves. They want to have the factories in their economies or on their ground. They want to have their workers within those. So they buy the raw materials, they finish them, they process them, they use them, and then they sell back at very competitive rates, often more competitive than Latin American companies can do, the finished goods. So the manufactured goods, the processed foods, all kinds of stuff they send back. And that has made it much harder for Latin American companies, Latin American factories or workers to be the ones who do those things and really learn how to do it, sort of increase the value added of the things they produce, and by that being able to create jobs that pay better than many of the ones that we see in Latin America, or even create more jobs in general. So while I do think short-term, medium-term, the interest of China, the financing coming from China, the companies coming from China have brought a boom to these economies. They've been part of the growth there in terms of infrastructure, in terms of innovation and the like. But as you look medium to long-term, these economies over the last 20 plus years have become less diverse and have really faced some of this deindustrialization, which is a challenge when you think about how do you bring prosperity to the region in the longer term.
So with Chinese trade and investment sort of acting as this double-edged sword, as Shannon put it, Margaret, when you talk with folks in Latin American governments, policymakers there, how do they view Chinese investment and engagement these days compared to, say, trade and investment with the United States?
Well, again, I think it depends, right? In general, the narrative is that, and this isn't always the case, right? And it depends obviously on the sector industry that we're talking about, but that, China is the one frequently that is present, and in some cases is, Chinese companies are the only ones bidding on certain types of projects, either because they're able to tolerate higher levels of risk or because they have, Chinese insurers, Sinosure, for example, banks supporting them in some form under the auspices of the Belt and Road Initiative, and so are able to pursue some projects that others simply cannot. And so for, many in Latin America, they see still China as they view China an opportunity, right, as going sort of hand in hand. On the other hand, there are instances of really very public failures of projects that have had an effect on views of China in the region, and this is very country specific, right? If you look at Ecuador, I think by no means has Ecuador written off China, and in fact is looking to pursue potentially a free trade agreement, a bilateral free trade agreement with China, in addition to trying to renegotiate the terms of outstanding debt to China. But still is looking for, and also is looking for other projects, investment in other projects. But there is more of a sense among the general population and the government that China, deal making with China, that negotiation with China needs to be approached with a greater degree of caution, perhaps than Ecuador has demonstrated in the past, and other administrations have demonstrated in the past. And you see these narratives surfacing also in places like Chile, where there really is a sense that there is such a dependence at this particular juncture on China as a destination for Chilean exports, and also on Chinese investment in critical sectors, including those associated with the green transformation and digital transformation, these sorts of industries that many in the region expect and hope will help to achieve some degree of growth in the coming years. And so still, I think it's a bit of a balancing act. I think there's tremendous interest in more in the way of U.S. engagement, private sector engagement, government engagement, development assistance, things of this nature, but not always a sense that the U.S. is able to deliver on the level perhaps that it has suggested that it will, that just the resources are not there, or they're being otherwise directed, or if they are being directed to Latin America, it won't happen within a time frame that's going to make much of a difference for some of these countries as they grapple with what is a very difficult economic situation at present. So I think, frankly, Latin American countries are looking for opportunities from everywhere. They have different views, right, on who they'd like to work with, but it's just seeking out opportunities at this particular juncture.
So Shannon, I want to pick up on a thread that Margaret touched on about the role of loans and on BRI projects in particular, because that's something that we've heard about and related to other forms of Chinese investment around the world, with this narrative of, oh, China goes abroad and entraps countries in debt and then exploits them. Is that something that you see playing out in Latin American countries, or have we gotten this narrative a bit wrong?
So I think here too, there's sort of that double edge again, right? And so on the one side, as Margaret was just saying, a lot of times U.S. companies don't show up. There's a tender offer for a new bridge or an electricity grid or a port or all kinds of stuff, and the only people bidding are Chinese. The other side is, even when there are U.S. companies or European or others who are showing up, the package that they come with is less attractive, right? And one thing that China does well all over the world, part is the Belt and Road Initiative, but more broadly is they come with the financing, right? So they have sovereign wealth funds, sovereign leverage funds that come. And so, they have, here's the package, they're competitive in that sense, and then all the financing is lined up. And I do think the United States, even when they have their companies come, we're a bit less organized in that sense, and a bit less open about that, and magnanimous, I guess, in the the loan terms and the amount of money and the guarantees and the like, and partly because our system is so much more decentralized, right? You're trying to bring multilaterals in, the Inter-American Development Bank or the the Andean Bank or others involved. You're trying to bring in OPEC or other financial instruments. It's a bit more of a decentralized situation, so it's harder. It's much easier when you are a state-owned enterprise working with state-owned banks or sovereign wealth funds and the like to sort of pull that together. But that has been one of the challenges. So, what do Latin Americans think about this, or what's the challenge in terms of the debt trap? Lots want that money because it's the only money there, or it's the most attractive money. So it's not as if they're turning it away, and nor should they in many ways. But there are concerns, and when I've talked with various Latin American leaders or those in the government who are working with the Chinese, there is a wariness at times about what those terms look like. And there's been lots of studies done about how opaque these terms are often, so it's hard to know beyond just the people who signed it what it looks like more broadly in terms of the population. They're not always negotiated broadly. As we know, China has less interest, it seems, in the type of governance of the economies or the governments they're working with, right? Some of the things that U.S. companies are held to with Foreign Corrupt Practices Act and the like, that's something that really international companies have to think about, particularly U.S. or those from Europe. Those are something that, it seems, there's a little more elasticity or movement in some of the Chinese. They seem less concerned about it, at least up front. So I think there are sort of issues there. So the money comes, but some of those strings attached or some of the governance around the way those projects, particularly when they're big public works projects that are there for the larger population. And one thing I would say Latin America has, which some of the other places where China's operating with Belt and Road, is by and large, almost all these countries that they're working with are democracies. So in the end, those leaders are accountable to and can be held accountable through voters by a broader population. And that's not always the case in Africa or other places where China's operating.
So speaking of how the public has received some of this, increased Chinese investment and trade, in other countries in the world in the last few years, we've seen China's public image really take a hit. There was a Pew poll that came out a few months ago showing record high negative numbers for China in a 19-nation survey. How has increased Chinese investment played at that local population level for these publics that are going in a few years to elect or re-elect a new government? And I'll ping that over to you, Margaret, first.
Sure, absolutely. Might I say something just very quickly about also just something to watch as we think about the debt? That I couldn't agree more with Shannon's analysis. I think it's absolutely spot on. But I think it's also important to understand that, and I mentioned this previously, right, that the sovereign lending at the very least, which has been the bulk of Chinese lending, has been on the decline. That said, right, there are indications that it's going to pick up again in 2022. It has already picked up again in 2022 to a certain degree. We'll release those numbers at the end of this year, and that there may be more to come. I mean, there's a lot of, I wouldn't say a lot, but something of an uptick of interest in Latin America among some international investors, not Chinese ones, right, which view occasionally the region's debt challenges as being somewhat overplayed. Whether China feels the same way is another question, but certainly, given the financial situation at home in China, it could go, various directions, but we may very well see, more engagement from the policy banks in projects deemed really quite critical to China's own growth. And again, I'm talking about new infrastructure projects, maybe not roads and rail and this sort of big, large scale infrastructure, but also, this innovation related infrastructure, digital infrastructure, which is viewed as absolutely critical to, ensuring that China overcomes the middle income trap and continues to grow at certain sustainable rates well into the future. So something to keep an eye on in that particular respect. As concerns views of China in Latin America, you referenced some of the polling. It's a bit confusing because there are different results depending upon the poll that we're talking about. If we look at Pew, which has released some new numbers there, we still see Latin America, broadly speaking, and it's not all of the countries in the region that are being surveyed. So it's difficult to get a sense comprehensively of what, how the region views China, but as being viewed more positively than other parts of the world. So we're not talking, major majorities having positive views of China, but as on average, more than half of the population views China generally positively, or at least looks to China for opportunity and sees China as an important partner. On the other hand, there was the Latino Barometro, right? LA Pop study that came out this past year, and there we saw that there was very little trust in the Chinese government, including in comparison to the U.S. government, and yet still very much an interest in continuing to work with China to achieve various economic and development related objectives. So it's a bit of a mixed bag. I assume there's quite a bit more variation on a local level, a national level, and even sub-regional level than any of these surveys can manage to capture. But if anything is clear, it's that still in Latin America there is I think a real clear tendency on the part of most all governments, including, as I mentioned, at the subnational level, perhaps especially at the subnational level, to continue to engage, pursue opportunities to ensure some degree of economic growth.
Let me chime in, and I agree with exactly what Margaret was saying. And I would say there's sort of two things going on. One is that we are seeing globally a shift and a sort of suspicion on some level about some of China's involvement. And, part of that comes from the, wolf warrior diplomacy. They've been a little bit heavier handed in the last couple of years than they used to be. So the velvet glove is off, at least in some countries. Part of it is that there have been some signature projects that have ended badly. And then, in cases like Sri Lanka actually ended the government. So we've seen some, Malaysia actually pulled out of a deal. The new government pulled out of a deal. So you start to see some projects where the ramifications or the consequences have been much clearer and worrisome to general populations. Less in Latin America, I would say, but more in Asia, where there's been more, frankly, much more Belt and Road money invested. So you're seeing in general, a colleague of mine here at the Council on Foreign Relations, Josh Kurlansik, just put out a great paper. He's a Southeast Asia and China expert that looks at some of these global phenomena, sort of the backlash against China, and sort of Belt and Road investment is just one part of this. It's also their, information campaigns and their media outreach and that kind of stuff. But on the other side, and particularly for Latin America, there is a strong feeling I see in Latin America, or I sense in Latin America, that these countries, whether you're talking about the leaders or whether you're talking about the voters, don't want to have to choose between the United States and China. Yes, they see some challenges in terms of some of the commercial investments or some of the other investments or some of the behavior of China, but they see that too with the United States, right? They have a long relationship with the United States. It hasn't always been the most harmonious or together. And so I think, if they could, what they would do is find some middle road where they balance these two superpowers and probably bring in some others, bring in the Europeans, bring in others, and really find themselves, they're looking for a pluralistic approach to this rather than a dependent one, frankly. Now, they may or may not be able to achieve that. And it may depend on the sector, it may depend on the country, it may depend on a lot of other things that are happening. But particularly as you see the divides between China and the US accentuate and accelerate, I think they're trying not to have to choose. And I think that is a bit what you're seeing in the polling numbers, as well as sort of in this receptivity to continued investment.
So, Margaret, do you think that Latin America is going to be able to walk that line between the US and China? Or do you get a sense that some of these investment projects may come with exclusivity strings, that you can take this funding, but only if it's Chinese, or you can take this US assistance for building high tech, but only if it's from the US, and if you exclude, say, Huawei from your communications networks?
It strikes me, and perhaps I'm ignorant on this point, but it strikes me that most of the sort of exclusivity related demands are coming from one side, right? From the US side, and really focused most extensively on tech related matters. That said, I mean, and I'm thinking mostly of 5G and the approach, to trying to ensure that certain companies are used, or providers of 5G equipment, right, are used over Chinese ones, be it Huawei or ZTE. But what's being, as I understand it, right, the approach now is Open RAN, right, which is one that is all inclusive, right, and indeed in the ORAN network there are Chinese companies involved. So to the extent that that is ever, an option that is feasible from a financial perspective, right, and is viewed as indeed more secure than using just one equipment provider, then it's more inclusive. And so to the extent that that continues to be pushed, it's a little bit of a different thing. On the Chinese side, I don't, I haven't seen, and of course, it may very well be that a lot of these conversations are taking place behind closed doors, and nobody quite understands, the full terms of some of these agreements or conditions that are put in place. what we do see with China frequently, especially with these sort of package deals that Shannon referenced, is you have the financing, and with the financing comes a requirement to use Chinese companies and Chinese equipment, right? So that said, a lot of those deals were struck through sovereign lending arrangements. Not all of them, but most of them. And so much depends on whether we see a lot more of these in the future or not, right? These sort of packaged agreements. But certainly that was, part of what China was doing for a very long time. And we continue to see the implications and ramifications of that sort of deal making throughout the region. But other than that, I don't know of too many examples of sort of an effort to ensure that either side is not using the other, or that there are certain limitations put in place. So I'll leave it at that. Perhaps Shannon has some better examples.
I think where you see the sort of sharper edges or the elbows thrown around is often when Latin American or other countries, frankly, don't want to buy from China. So, we have an alleged example where the Brazilians wanted to buy vaccines from somewhere else, and the Chinese pulled some deals because they felt that the Brazilians weren't respecting their vaccines, and so there were sort of challenges there. We've seen this in Australia, where Australia had wanted a bigger investigation into the origins of COVID, and then all of a sudden China punished them with sort of trade and other issues where they stopped importing things, and they put some of their a lot of their products into the cold freeze, sort of sanitary or other issues, saying they couldn't import them. So you do see some hard edges if China is not chosen or not favored. There's a big sort of kerfuffle about whether Huawei would be allowed into the Brazilian 5G auctions. And at first it seemed like they weren't going to be allowed in, and then China sort of retaliated behind the scenes, and then all of a sudden they were allowed into it. So I think there are some rough elbows here and there thrown on both sides. But the U.S. concern is one, frankly, that is growing. It's obviously in the telecom and some of the surveillance, the idea of surveillance, and worried about what the U.S. sees as companies that are very closely tied to the military in China and sort of dual use sides. I think you may start to see an expanding concern from the United States about the Chinese rolling up of various resources, particularly green technologies, whether it's lithium or other things, where they're going and buying lots of mines. And as you look at the U.S. strategy that they laid out a year plus ago, the supply chain strategy, the 4 areas that they say, or the U.S. government is saying are strategic for the U.S. are 36 critical minerals, their pharmaceuticals, their large capacity batteries, and their semiconductors. And so some of these fit within that crossover of the things that they believe today that the U.S. and the world in general is too dependent on China on. So will they be able to walk that line? I think in some sectors they will. They'll be able to choose their partners, and whoever provides a good package, they'll be able to then use it. There are other sectors, and I think there'll be an increasing number where it will be seen as a strategic interest, and there will be some ramifications if you choose one provider or another. And so, for instance, in the telecom space, there's sort of a question, if you don't go with the ORAN option, which is a much more open, if you go with a kind of closed loop Huawei, whether you could hook into telecom grids and networks that are not singularly Huawei, and what happens to that data. I think we may also see on a softer side, not quite as aggressive as the US, or sort of as explicit as the US, some of this coming out of Europe. It won't be, you can't trade with Huawei, but if you don't protect privacy, then we can't connect to you, because we have to protect the privacy of individuals. So I think that is, when you look at the Digital Marketing Act that's just come out of the EU, out of Brussels, some of that too, I think will be difficult for some of the Chinese companies, the big ones, to meet those standards, at least the way they operate today.
Your mentioning of all of those different areas of critical technology the U.S. has identified sort of brings us into this other debate that's been going on in the U.S. about either ally shoring or friend shoring as a strategy to better secure some of these critical supply chains. And Shannon, in your most recent foreign affairs article, and I'm guessing in your upcoming book, you argue that it's really in the U.S. interest to build up Latin America in the same way that countries in Europe and countries in Asia have developed these strong regional markets. So how do you see those two debates intersecting right now?
Yeah, I mean, one of the most interesting phenomena of the last, 30, 40 years is that, we have seen not just globalization, which we talk a lot about, but really more than globalization, we've seen regionalization. And we've seen the rise of three regions. We've seen Europe integrate, we've seen Asia integrate, and we've seen North America integrate, though less than those other two regions. Latin America has not integrated at all. And I personally think that's part of the reason that they have been slower to grow and climb the technological scale and really prosper. But given where we are, given the tensions that are in train and look to continue, I think for the rest of this decade at least, this is an opportunity. This is an opportunity. The United States is searching for, at least in some areas, more opportunities, more resilience, as they say, in their supply chain. So that's part of it. Part of it is market driven. We're seeing changing demographics. We're seeing, which make Asia and China in particular not as cheap as it once was, if you're looking at low cost labor. We're seeing new automation and new technologies that make labor costs less of the overall cost for a company that's producing things. We're seeing changes in climate change, and particularly policy around climate change that is adding costs for every extra mile something travels because of carbon border adjustment taxes or other kinds of emissions costs. And we're seeing these geopolitical tensions. So given all of that, and COVID just heightened this with all the logistical challenges and the extra costs and delays and all of that, I do think you are seeing companies all over the world look to shorten their supply chains, duplicate their supply chains, find alternative suppliers and the like. And here, particularly for the United States, Latin America is a great place to do it. It's closer, but not too close. So you don't have the vulnerabilities of concentration, but you have the benefits of some diversification, right? It's kind of the Goldilocks middle, not too close, not too far. It is one of the only regions in the world where we actually have free trade agreements. The United States does not have a lot of free trade agreements, but the ones we do, 13 countries that we do have agreements with are in the region. So you already have a baseline for tariffs, for non-tariff barriers, for arbitration in case there's legal challenges and the like. It is also a place that has a lot of the resources or the capacity for the things that the United States worries about. So critical minerals, pharmaceutical products, some of the components into electric vehicle batteries and the like, a lot of that's already present in the region, and there's a scale that could be built upon. So as the US has the strategy and now they're trying to implement it, I do think the Western Hemisphere is a good place for them to look, along with the other, quote unquote, friends for friendshoring, whether that's the Quad in Asia, whether that's Europe and other places.
Fantastic. We've had a great conversation for the last half hour, and I know our audience has a lot of questions. Audience, if you haven't submitted a question yet, you can do so at ccga.live. Put in your questions, I'll see them, and I'll pitch them to our panel. And I'm going to start with one that I'm going to direct to you, Margaret, first. What advice would you give the Biden administration on Latin America policy in order to more effectively compete with China in the region?
Well, I mean, first of all, I'll say that, when we talk about Chinese engagement and US engagement in Latin America, we're really talking about apples and oranges, right? The US is simply not going to be able to do some of the things that China does very effectively, which indeed, result in a certain degree of influence in the region, and have ensured that China's, position, China's footprint continues to grow in certain strategic sectors and really across the board. So it's difficult, to think about this in perhaps a comparative sense sometimes. But what the Biden administration can do, right, is to prioritize the region and to demonstrate, a real prioritization of the region, and for example by prioritizing things like the Summit of the Americas or other engagements, by making high level visits, by really coming through with on some of the promises that have been made to the region through a series now of sort of platforms and initiatives that have been announced that are directed at the region. And so I think there is an interest. There's a momentum in terms of, of policy making that addresses the region and regional concerns, trying to align interests, US and Latin American interests, but still, at least on the part of Latin American actors, a real sense that there's very little follow through. And so simply addressing that's not a simple thing to do, obviously, but addressing that is fundamental. That's not to say that China always follows through on its promises either, but we do see, a lot of new initiatives, and we do see a lot of go through a checklist of the things in China's policy frequently. There is, evidence of things playing out. I think there's a sense among many in the U.S. government too that PR is a problem for the U.S. given just the extent of U.S. engagement in the region and how very strong a lot of these ties are. And in fact, much stronger than China's in many respects, but that's not well understood, or if it is well understood, it's not being acknowledged in a way that the U.S. might hope that it would be. So there are, I think a lot of things. The other thing I would say is that, our Latin America policy cannot be a China policy. And I think frequently, whether fairly or not, it is interpreted as such. And words like, China threat, even if they may be founded, right? There are words like China threat or malign actor or debt trap diplomacy or even friendshoring, I think are problematic sometimes because they are interpreted as, not necessarily an interest in engaging with the region for the benefit of hemispheric relations, right, and hemispheric economic policy, but in order to compete more effectively with China. And so that's a real hurdle for the U.S., I think, looking ahead.
Maybe I'll add a couple of things. I agree with all of those things. And I do think the Biden administration has a real opportunity here. They came out of the Summit of the Americas, and there they announced an America's partnership that was going to be sort of an economic and commercial framework, somewhat similar to the Indo-Pacific economic framework that had been put forth just a month or so before. And this really has, for those countries in the region that want to participate with the United States, I think it is a great starting point. So what could be in this framework, it's pretty open and you could pick and choose which parts, but you could see, one of the issues on the table is digital trade and sort of that side, can the United States work with Latin American governments to digitize customs, to make some of these procedures faster and easier for all involved? That would speed trade between both sides, and I think would be quite beneficial for regional trade, which is quite important in terms of competitiveness and bringing jobs and the like. It is also the United States, as they look internally, but they look broadly at the green transition and how they're going to be part of that and lead on that in various ways to sort of build back better world that they've been talking about. Latin America can be a part there, right? There's lots of infrastructure Latin America needs or upgrading to be done, and it can be done in a green way. And so as the US funds things, as Inter-American Development Bank or other kinds of multinationals fund things where the US has a strong seat, make sure Latin America is part of that discussion, and a lot of those monies flow there to help them in upgrading that both will allow logistics costs to go down, but also allow them to make this green leap, which will be better for their societies, for their consumers in this time of quite high or volatile gas and oil prices. Help them with that transition. I think that's something definitely the United States can also do and sort of put on the agenda there. The other thing, the United States is looking to spend lots more money for particular critical industries. Semiconductors is the one we're talking the most about, and there's a bill working its way up through Congress to spend, $52 billion there. But think about, as you're going to fund companies, allow some of those operations to be in free trade partners, right? Which includes a lot of Latin American countries. Not every factory has to be in the United States. Let it be more regional in terms of some of the sourcing and the like, and think about it there. And then, to just double down on what Margaret brought up there, it's not just a China policy, it's not even just an economic policy. And so the United States has lots of issues on the table with Latin America. It has migration issues, it has human rights issues, it has democracy issues, it has all kinds of stuff, environmental issues, all these things. And those are important too. Right? One of the reasons when you look at these polls in how do Latin Americans feel about the United States or feel about China or other places, often the United States, at least the people in the United States, come out pretty high, right? People really like the people in the United States, in part because in countries that have more contact with the United States because of immigration, because of students studying here and the like, tend to like the United States better. If they have exposure to the United States, they tend to like the United States better. And so think about that in migration policy. One, as our labor markets are tight, who can come in terms of guest workers, but also, it's time, I think, after COVID to reopen back to students and others, and think about those from within the region being targets of that, so they get to know the United States better.
Those are all great points, and hopefully someone from the administration is tuned in or is going to watch this later on. Another question from the audience is about Taiwan. How is Taiwan viewed throughout the region? And how does Taiwan as an issue play in both America's and China's relationships with countries in Latin America?
I'm happy to take that one, Craig, if you'd like. I don't know that Taiwan is considered all that frequently by countries that no longer or that have not for many years or ever maintained diplomatic ties with Taiwan, which have diplomatic ties with China. The countries where we do see, some consideration of Taiwan and indeed engagement with Taiwan are those where, that handful, really it's Paraguay in South America, a handful of countries now in Central America, and just a few in the Caribbean that still maintain diplomatic ties to Taiwan. And there, Taiwan continues to engage, including amid the pandemic, and wide-ranging assistance. Some of it agriculturally focused, some of it focused on other issues of development-related importance. And it's in these countries too, some more than others, that there are debates taking place about whether or not diplomatic alignment with Taiwan makes sense now and will continue to make sense well into the future. We saw, this has been something of a debate in the Latin American and Caribbean region, and indeed globally for many decades. But we've seen it intensify really since Tsai Ing-wen, the president of Taiwan, was elected, because she is of a party that is more seen as more pro-independence. And when that happens, when there's a DPP candidate that's elected in Taiwan, we tend to see an upsurge in Chinese diplomatic activity in countries that are allied with Taiwan. And that's indeed what has happened. And really, since she was elected, we've seen 4 countries in Latin America and the Caribbean cut ties with Taiwan and establish them with China. Whether this will continue to play out is unclear, but certainly there's a sense that there are a few dominoes yet to fall in Central America, and a roaring debate, especially among the agricultural lobby, which is pushing very hard in Paraguay for diplomatic alignment with China, viewing that as an opportunity to export more and more directly to the Chinese market.
Next up, a question about how Chinese investment and influence in Latin America has affected populist movements in the region, which has been a topic of some news coverage here in the US.
I'm happy to start. For many years, the biggest investment China had in Latin America was in Venezuela. Run by a populist that veered into authoritarianism. There has been, I think one thing we see and I mentioned this before, we see is that Chinese investment is less susceptible or less cautious about the kind of government. So whether it's a full democracy, whether it's a autocracy, whether it has strong governance and anti-corruption movements, whether it is weaker governance in terms of those issues, that's less important to Chinese companies, to the Chinese state that's often backing them than in the past. So you do see some of that. And this is not just Latin America, you see this in Africa as well. They're quite happy to work with, authoritarian governments or other governments and the like. There have been, as we, a couple places where Chinese investments that haven't turned out as well have led to, uprisings, have led to some, populist elements more, I would say, in, Pakistan or in other places around the world where it's been a bit more of a calling, a rallying cry for those in the opposition. So I think it's less that China looks for populists or looks for particular areas, but they are willing to invest more broadly, right? Their risk appetite in terms of governance is much, much broader than often companies from the United States and Europe. And that might be because those multinationals from the US or Europe are held to a higher standard. And if you read their annual reports, they'll say things like that. But there's also laws that they have to comply with, right? And Foreign Corrupt Practices Act and others that they are really held to, that some Chinese companies, depending on whether there's a little bit more leeway. Good.
Margaret, how do you read the situation?
I agree with Shannon. I would add, though, I mean, we have this phenomenon now where you have, at least from the top, right, a real push to focus on quality infrastructure and quality investment. What that means in practice is unclear, right, and how that's going to translate across regions is unclear. But in Mexico, for example, I mean, where you do have, these populist tendencies at play, there was an interesting conversation that took place between the Chinese ambassador to Mexico, and the head of what is called the China Latin America Cooperation Fund, the CLAC, as it's known. And it was published for whatever reason online, this sort of conversation that they had. And what they said was, we see opportunity here and we're willing to take risks, just as Shannon mentioned, right? However, we're also aware of some of the challenges associated with doing business in Mexico, whether it's in, the energy sector or otherwise, and a lot of the uncertainties brought about by the fourth transformation and just, Lopez Obrador policy in general. And so what the ambassador said was, look, continue to engage, but engage at the local level. Because this is where you are likely to encounter potentially, and maybe that's, I don't know if that's an accurate, characterization or not, less resistance, at least from a political perspective, or less uncertainty. And so whether that, that ends up playing out well for China or not, I think still remains to be seen, but there is an awareness, right? So whereas there may be a higher tolerance for risk, there's also a sense that risk still needs to be mitigated, though perhaps in ways that, that other companies, different ways than other companies might approach.
Well, Margaret, Shannon, that's all the time we have today, but thank you so much for joining us and for joining our audience today. For our audience, you can find more information about our research and our events on China, Latin America, and a host of other global issues at thechicagocouncil.org. Thank you so much for tuning in, and we'll see you next time.